real estate can be as passive as you need it to be, and it's very fluid. At any point, you can take a short-term rental and completely eliminate yourself from the equation by getting a property manager or a co-host. There are so many strategies in real estate where you can use other people's money, where money is not the limiting belief. A lot of physicians use 10% down loans for short-term rentals and their creative financing strategies. So there are many ways around it. Just educating yourself makes a big difference. I've made so many mistakes. I could have compressed my journey by 10 years if I had started earlier and I had the right guidance. Educating yourself, but overall, by investing in alternative assets, getting out of the stock market, you're actually lowering risk in your portfolio.
Okay, so this doctor that I get to interview today retired from medicine even at around age 40. She is Dr. Param Baladandapani. She is a radiologist by training, but now an avid, real estate investor, syndicating large property purchases in the tunes of multiple tens of millions of dollars. You are going to love this conversation with her because she is like a numbers nerd. And when you get to hear her, you get to see that like you can't afford to think small when you are a physician, when you are a professional who is trying to build multiple streams of income. Might as well go big, right? All right, so I'm going to get out of the way and I will let you listen to my interview with her. It was hosted during the Multiple Streams of Income Summit on the Women Physicians for Multiple Streams of Income Facebook group, and we had an absolute blast. So make sure you grab the resources downloadable by the time we're done, but listen to the interview. Your mind may just be open tonight, the possibilities that exist even as a physician, even as a busy professional. I'll see you on the other side.
You guys, thank you so much. You did a great job with the name, by the way, because I know it's long. And I just want to, first of all, acknowledge everything that you do. I think you've been a huge inspiration for me because everyone talks about abundance mindset and scarcity mindset. And I feel like you're someone who I look up to because you're always giving and sharing with no expectation. So I love what you do and how you're serving the community. So thank you for everything you do.
It's my pleasure. Can you sort of just take us back, to tell us who you are, what you do, like your backstory about yourself, where you are right now, so that people can just like get that kind of broad picture, and then we'll take it back and get the pieces.
Yeah. So I'm a radiologist in Southern California, and I think I have the same path as most of us do. I was, doing everything that you think you should be doing as physicians. 2019, 2020 was a huge transition for me, where there was a merger at work and there was a rough career transition. And at that point, I realized that I needed my income in medicine wasn't as secure as I thought it was, and I needed to build additional streams. So I went all out. I started educating myself. I built a real estate portfolio. It started in 2014, but I just had a few properties here and there. But that's when I really accelerated. And I got to the point I think it was 18 months, less than 12, 18 months, where I got to the point where I was financially free. All of my expenses were met through cash flow from my real estate portfolio. And then I cut down to a day a week in medicine. And then like you, I was like, okay, why aren't more physicians talking about this? We need to, it's not easy, but it's simple. And people need to know about what their options are. And so I built out Generational Wealth MD, the community. We're now 20,000 physicians strong. And then I started coaching and helping physicians build their portfolios and realized that most people want to be passive investors, most physicians, and started getting into the space where we now syndicate and buy apartment complexes, but allow other doctors to come in as passive investors. So they have options. And that's been the path. And I think giving back for all of us is a big part of who we are as physicians, as human beings. And GW Gives is our nonprofit. And I feel blessed that I'm able to have time freedom, geographic freedom, but also that legacy freedom and work on
Mm,
that part. And yeah, so that's where we are.
amazing, amazing. So I've asked people as I've interviewed them now. We began with sort of like just like the big broad picture, but in terms of kind of where you started from, okay? You weren't always syndicating properties. You weren't always, can you kind of just like take us back to sort of where you were even before the thought of real estate came to mind?
Yeah, so I think 2010 is when I graduated from training, started, making money as a physician, and I'm the first physician in my family. It was a huge deal, and I got the $1 million house, got the doctor car, and I thought I was doing well. I was making half a million in income. I had 12 weeks vacation. Everything seemed perfect. I had a mentor who kind of got me into index fund investing, and then he introduced me to real estate investing. So I got a couple of properties, but the cash flow I thought was I didn't see it as meaningful enough to really replace my income, so I wasn't paying attention to that part.
Mm,
And so I think I was doing what most people do, right? The traditional retirement model, stocks and bonds, and then putting away a lot of money. I was pretty conservative, so a lot of money in savings accounts because it felt like it was secure, and I thought I was doing myself a favor doing that. But it was really the career transition that kind of made me look at my passive income because I was like, okay, I've done things right for the last 10 years. Where do I stand? And I looked at it and I realized that in my stock bond portfolio, after doing everything for 10 years, I could probably withdraw $2,000 a month from it. That was when I first learned about the 4% safe withdrawal rate. And I was like,
mm.
wait, I need 10,000 at least post tax. What am I going to do? And so that was the aha moment for me. I was like, oh, I cannot put my family through this again and again if this ever happened again. And I thought something needed to shift. So for me, was an eye opener, just, really looking at my numbers and seeing what my passive income was.
So I'm actually going to pause here, okay? And I haven't done this for any of the other interviews because what you just said now is really profound. Ladies or whoever is here listening, can you just throw out a number right there? Like if you had to stop work right now, how much would you actually need to run your family, to run your household without a drop in lifestyle? And this is like a public come to Jesus moment for most people. But if you're bold enough, just throw it in the chat. Let's just start making these numbers concrete because when we start to think about like passive income, side gig income and all that stuff, these are the numbers that you really need to know and have a handle of for any of all the things that we're saying to even make sense. This is the number that will help you actually decide on what vehicle you need to be, considering as you think about passive income. But let's continue, Haram. So,
Yeah.
yeah.
And so, what you highlighted was really important. She goes, because I was like, I need 10,000, but the other part of it is like, how much do you, based on what you have right now, how much do you actually have? And so we actually built out a calculator. I built it out afterwards because it was hard for me to explain to people. So I say, just use the calculator, and it's at generationalwealthmd.com/retirement in lowercase. And I plug my numbers into the calculator, and it would take me, if I continued just investing in stocks and bonds, it was going to take me another 17 years to get to retirement. And I was able to compress that down to a year because I pivoted. Because at the end of the day, it's all about what are your returns, right? What do
Mm-hmm.
you get? And you can only withdraw 4% from your stock bond portfolio. And that's what it boils down to. So really knowing what your passive income numbers, which I think everyone's dropping in, and that's amazing. But
Mm-hmm.
also, okay, where are you right now, and what is your goal, and how long is it going to take you if you keep doing what you're doing? For me, that was the moment where I was like, okay, something needs to shift.
Yep. 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 Now, so when you first had that aha moment, what was your next point of action?
Yeah.
What did you do next?
So what I did is I looked at my current portfolio my portfolio at that point, and I saw that in real estate I had about a third of my money invested. And at that time I was just doing super passive long-term rentals, having a property manager manage it. And I said, well, I have a third of my money invested, but I know, right? And I made a lot of mistakes, right? I made all the mistakes in the book, I made them, but I still had twice the amount of passive income from my real estate portfolio. So for me, that was like so I said, wait, so I have 200,000 invested in real estate and I'm getting 4,000 in passive income from that. I have 600K in my stock bond portfolio and I can only withdraw 2,000 a month. So I was like, okay, so let me just keep doing that, right? So you always think your path is linear. It never is. And I said, I'm going to buy in 3 years, I'm going to invest in more long-term rentals. And in 3 years, I'm going to hit my point where I'm financially free. And so I started deep diving. I took tax courses. I started investing in short-term rentals, started using some of those advanced tax strategies. And then I accelerated to the point where less than 18 months into it, I was at the point where I had 10K in tax-free cash flow from just real estate without factoring in my stock bond portfolio. And I was like, okay, that's it. That was my goal. And I got there faster than I thought I did because I invested in education and I started tapping into some more advanced strategies that I didn't even know existed when got started.
Amazing, amazing, amazing. Okay, so if somebody were thinking right now of like, okay, that sounds amazing, real estate, right? Where do I even start with real estate? What would you tell them? Like a 3 point, big
Yeah.
headline type, what would you tell them?
Yeah, so that's a great question, Shigozi. So I think the first point, which is what I highlighted so far, is most of us think that, okay, if I pick the right stock or if I work harder and I take more call and I work more shifts, I work weekends, I take up a second job, that's how I accelerate my way to financial freedom. The first point was you really need to look at your asset allocation, right? And so ultra high net worth people have about 30 to 50% in alternative assets, which give them higher returns and diversify risk in their portfolio. So that's the first thing, like look at your asset allocation. And so I hope people see that there is value to that. And, that's really how a lot of us over here, I mean, Rachel's here, you're here, and I know Sunny invests in real estate too. So, really shifting asset allocation is the first point, right? It's not about working harder, it's working smarter. But then the second question is, okay, so this is like this, there are so many options and you have so many amazing speakers and everyone's talking about a different strategy. So how do I get started? And I, even today when I get on calls with people, my first question to them is, okay, I see real estate investors as three separate buckets. And I tell people, see which bucket you fit into, right? And so the first one is someone who wants to be super passive. I call them, the investor or the legacy builder. And I'm willing to give it some time. I can wait 10 years and I'm going to keep investing, but my time is important to me. I want to be completely hands off. And so this is people who invest in syndications passively. This is people who buy long-term rentals and have property managers manage their properties, right? So that's super passive. And so that's the first bucket. And, they still get returns that are twice or thrice what they would get in the stock market, but and it's tax efficient, but they're completely hands off. And the second bucket is people who I call our hustlers, right? That's what I did, where you're willing to put in more time for a short period of time for a few years, which really accelerates your path to financial freedom. And then you can completely put everything back into that passive bucket. So like right now on on my personal portfolio, I probably spend an hour a month on it and it's still giving me, over six figures in cash flow, right? So you work hard, you do rehabs, and this is where you do maybe midterm rentals. So you get into some of those ways of forcing value and getting higher cash flow quickly, but then you can make it completely passive. And so are you a hustler? And then the final category is the person I call an entrepreneur because short-term rentals, right? It's almost like real estate and a business, and you need to know, be efficient at it, right? Or if you're raising capital or you're a general partner, right? And so I say those are my entrepreneurs. They really want to tap into those advanced tax strategies. Some of our physician shelter $800,000 of clinical income from taxes in 1 year because they're investing in real estate, right? And so that's really supercharging your returns. You're getting over 40% annualized returns, but you're putting in some time to build those systems and run it like a business. And so are you an entrepreneur and what do you want to do? And interestingly, I see a lot of physicians really excited about short-term rentals, even now, and it's because, yeah, I'm preaching to the choir here.
Of course.
And it's because of all those massive tax savings you can get, and that really gives you a boost, right, in terms of your returns. And so I tell people that the first question is like, where do you see yourself? And you don't have to start off being an entrepreneur. You can start off being completely passive, and then at some point, as you educate yourself, you may want to shift. You may want to just stay there, right? And there's a trade-off for all of that. But where do you identify yourself on the spectrum? And there are resources for everyone over there, and either of those strategies, you are increasing your returns, you're reducing your risk overall in your portfolio. So it's really accelerating you to financial freedom, but pick whatever makes sense for you today. And it doesn't have to be 5 years from now. You may want to be somewhere else, but what makes sense for you today? That's a good place to start.
That is so good right there. That right there is so good. I like how you just highlighted how different strokes for different folks, right? Because, we tend to be as a group, okay, and this is a huge generalization, just being in medicine, we tend to want the randomized control trial. We tend to want the best recommendations. We tend to want the guidelines. But the fact is, once you step out of that, white coat or whatever, that hospital, all those things are
Yeah.
out the window, right? And it becomes a matter of where are you? Where do you see yourself going? Where do you want to be to now determine sort of what your method and strategy will be. Are there any pitfalls that you've seen people sort of fall into when they first start thinking about real estate, about be it passive, as passive investors, as
Yeah.
active players, or as the more entrepreneurs? Are there any kind of pitfalls that you tell people, you know what, just don't do what I did here, or I heard this person did this, please don't do that?
I mean, there are a lot. So I'm trying to think of how I can break it down because it's like oftentimes it's like
Like,
don't do what
where do I start?
most of the time it's like don't do what I did because I made that mistake, been there, done that. But that being said, I think the first thing is always these limiting beliefs, right? So oftentimes we hold ourselves back. I think that's the biggest thing. The biggest things I hear are, and I've said this to myself, I think I delayed my journey multiple times, right? Initially, I was supposed to start in 2010, and then I waited till 2014 because I was listening to people around me. So there are people around us who sometimes they project their fears onto us, and so we're wondering about risk. We're wondering if we have the time to do it, and sometimes people are thinking, I don't even have a lot of capital. And I tell people, so real estate can be as passive as you need it to be. And it's very fluid, right? At any point, you can take a short-term rental and completely eliminate yourself from the equation by getting a property manager or a co-host, right? So it's very fluid. And I started investing during the pandemic, when there was no childcare, my kids were home, I was working full time, but that's when I scaled my portfolio, not when I had all the time in the world when I was single in 2010, right? And so oftentimes those limiting beliefs hold us back, but they're not really true. So this is why it's important to listen, to be part of summits like this, where you're seeing people like you doing it, and it becomes possible, and it's possible for you. So, and then same thing with money. There are so many strategies in real estate where you can use other people's money, where money is not the limiting belief. A lot of our physicians use 10% down loans for short-term rentals, and they're creative financing strategies, seller finance. So there are many ways around it. Just educating yourself makes a big difference. And then risk is another big thing, and that's where education comes into play. And so really leaning into, I'm preaching to the choir. A lot of us are coaches over here. We know I made so many mistakes. I could have compressed my journey by 10 years if I had started earlier and I had the right guidance, right? And so educating yourself, but overall, by investing in alternative assets, getting out of the stock market, you're actually lowering risk in your portfolio, right? And so those are the big things I say for people like are thinking about starting. But in terms of pitfalls, I mean, physicians sometimes we look at someone else who's doing it and we say, okay, I'm going to follow their strategy. I think buying older properties, not using debt effectively are some of the biggest mistakes I see. Really not running numbers and going and buying something because of the tax savings. It's like one of the biggest things. You want to make sure that property is profitable without the tax savings, without the equity of building up day one. So really knowing to run your numbers are some of the biggest mistakes we make. And I can go on and on, but I would say like those are the things. So it boils down to surround yourself with the right people who are
Yeah.
doing what you want to do. Listen to people who are where you want to be and who walk the path, as opposed to people who are on the sidelines. I think that's a big thing. So the right community, and then the education, right? You want to be educating yourself because it can be you can make very costly mistakes, and you could be spinning your wheels and spending 10 hours a week on a short-term rental when, at most you should be with a stabilized property. 2 hours a week is the most, 2 to 3 hours a week is the most you should be spending on it. You can be wasting your time, and you could just be taking decades making those mistakes and learning and getting to where you need to be, as opposed to compressing that to like days. And so education, mentorship, and community, I think, are huge.
Yeah, yeah. I mean, both of us could like go back and forth on this for days, okay? But we'll leave time for Q&A. I'm already seeing them dropping questions in the chat. We will save those questions for the Q&A. But now, how can people find you?
So we have a podcast, a YouTube channel, Generational Wealth MD. We have a free Facebook group where you can come in, post questions. But I think a great resource for people on here, I built out a free guide for anyone who's thinking about becoming a passive investor. And I think that's a big part of your community education. Really knowing to do your own due diligence is huge. So it's gwcapital.com/guide in lowercase. It's a quick 60-minute focused read, and you will end up knowing what makes sense for you. So you're not following somebody else's buy box. You know exactly what you should be looking for. You know how to analyze a deal, look at the numbers. It's a steep learning curve, but but at the end of it, you probably will know more than what 90% of people investing in real estate know. So I would say that's a great resource. I lean into resources like that, free education. And then we have the podcast and YouTube, like I mentioned.
I told you it was going to be good. It was gonna be good. I hope you had a pen and paper, okay? Because they always drop the bomb. They always drop good bombs. All right. So if you have not yet subscribed, just make sure you hit that subscribe button down below. Make sure you share this with a friend. Don't be stingy. Come on, share this with a friend, because like you don't know whose life it could be literally transformed by you simply sharing a video, right? Sometimes it just takes one little thing that somebody hears and it unpops something that was like a blockage in their minds before, and makes them feel free again, makes them love medicine again, makes them just practice medicine on their own terms. And you did that by sharing this, okay? And if you're a woman physician, be sure to come hang out with us in the Women Physicians for Multiple Streams of Income Facebook group. Make sure you pick up one of the resources down below. That's how we keep all this stuff going. Anyway, I hope you enjoyed all of that. I will see you on the next video. Take care. Bye.